So this is going to be a very different video from what you're used to. Today I'm going to be talking about a company that has Fiverr, Upwork, Google, Amazon, and Airbnb all as marketplace partners, as clientele paying them. And if you're asking yourself, well, who is this company and how are they working with all the biggest companies in the world? Wait a second. I want to be clear about something. The company that I'm about to talk about is currently trading after it IPO'd as a SPAC. It's an Israeli company, and it has had its fair share of challenging news when it comes to who were their clientele when they just started. And the company I'm talking about is Payoneer. Now, huge disclaimer, I am very long Payoneer, and if you want to know how long, you have to think about DFV and GameStop long. That's how long I am on Payoneer. And the reason I want to talk about Payoneer today is because I think this is one of the most undervalued SPACs or SPAC IPOs that have ever hit the market ever since the SPAC craze began. And why do I want to talk about Payoneer, even though it's not the biggest position? Because Store Capital and Facebook, although my biggest positions, are companies that already have enough runway as a company in the public markets that they're kind of proving what they're worth. And Payoneer is just in its beginning. It is in the most infancy stage of a public company. So Payoneer is a payment solutions company. It's a fintech company, and the SPAC IPO did not go well because it kind of copied all the behavior of the SPAC IPOs around it. And most SPAC IPOs are currently getting trashed in the market. Most SPACs are trading below what the IPO price of a SPAC is, or say like the price of a SPAC when it is first traded. That $10 or $20 price depends on the SPAC. Now, very few SPACs have managed to kind of exit that range and go higher. One of them is SoFi, which is a fintech company, and I think that Payoneer is going to reach a point where it's going to look more like SoFi stock rather than the other SPACs. And the reason I'm saying that is that because Payoneer actually has income from travel, and the travel industry is generating income for Payoneer, and travel is just now opening up. And we got the latest figures from the airlines such as Delta, and we're getting the latest figures from the TSA, and we know that people are starting to travel again. Now, business travel has not picked up as much as tourism travel, but this summer, tourism travel is back, and many countries have opened up for visitors. Yes, there are some countries that have managed to go back to lockdown or to all kinds of hybrid lockdowns, but most countries are doing what they can in order to keep the flow of travelers coming in. So Payoneer currently is not reflecting in their latest quarter much income from travel, and yet they have managed to show a lot of growth from quarter to quarter. And it kind of it shows the resilience of this company that managed to grow in this period of time, even though there was not a lot of travel. Now, there was a lot of income that probably came from the freelancers, and the freelancers that are on Upwork and Fiverr, that those platforms kind of blew up throughout year of the pandemic just because of all the remote work. And of course, that growth might not be sustained at these levels, but I really think that it's going to be hard to go back in terms of Fiverr and Upwork. Like, there's so many people who just discover these platforms. I even have a video on this channel on how to hire a freelance on Upwork, and this video has started to pick up steam just in the past 2 months, just showing that people are continuing to look for freelancers. So besides what I talked about until now, why do I like Payoneer? So besides the travel and besides that they're working with great companies, I think this is the kind of company which is doing I would say, dreadful job in terms of marketing. And hear me out when I say this, in compared to the size of the company and the kind of scale they reached in terms of revenues. Now, they just did a rebranding, and it looks, in my opinion, amazing. The rebranding looks great, and I think that me saying that they're doing a dreadful job in marketing is more about what was before the rebrand. And the rebrand was, I think, 2 weeks, like a week and a half before the IPO, and the stock actually trading under the ticker of PAYO. It looks great. It talks about the creator economy. There some page I forgot like what was really going on there, but just there a lot of featuring of freelancers there and just kind of telling the story of the company. I think that this narrative will take time until it kind of hits Wall Street, but they're doing a great job. And in terms of the kind of challenge with some of the clients in the past and how that hit the news, and there was a bear kind of article from somebody on Substack. I think the company did a kind of decent job of getting ahead of it by, doing, what they need on the business front, kind of remove that clientele. But on the marketing front, they should have just been upfront and like put it out there and said, look, these were our clients. They're not our clients anymore. And we did what was necessary years ago, and we're looking at this and that and into the future. So I think if they've done that better, this would not weigh on the stock. Now, I'm no analyst. I'm not a financial advisor. I'm not going to give this a price target. I think the stock goes higher from here. I think it's an undervalued opportunity. I am completely biased. I am as biased as DFV was biased on GameStop. But, there's a high chance I'm really wrong about this name. There's a high chance that I'm going to be completely stuck on this price point or price range for a long time before the company grows into its valuation. And there's a huge chance that the company's stock price will start to plummet and I'm going to take a huge loss. But I'm only going to be taking a huge loss if I sell the stock. So I am in this stock for the long run. I am continuing to accumulate stock. And I do also have a couple of bullish options plays on this stock. I think that it is one of the most highest conviction trades I've ever had. And the more I research about the company and the more I research about the environment they're kind of working in, it is easier for me to feel comfortable with the risk reward that is ahead. In terms of risk reward, we're talking about a company that is selling a lot of solutions and products for probably one of the biggest total addressable markets ever. And I think that even though there's a lot of, I would say, risks that are embedded in this company, and I talk about all the different risks and how these risks are actually tailwinds in the original video where I researched the stock. Even though there's all these risks, I think this is the kind of company who takes these risks and turn them to opportunities. Imagine like that there's challenges in a certain market and there's a company who each time sees the challenge and says, okay, great, nobody wants to touch this. We'll create a solution for that. So I think that's what Payoneer is about. Now, another huge disclaimer, I've not talked to anybody in this company. Last time I talked to an employee of Payoneer, maybe it was 4 years ago in a hotel lobby, and I didn't even talk about the company. I just said hi to a friend. So I don't talk to the company's employees, and I don't have any information that is not publicly available to you. But go to the original video where I researched the stock, see the metrics, see the numbers, and compare to what's happening in the market now, especially with growth stocks. This company is not only fairly valued, I think it is a bit cheap in terms of growth stocks.